Hello dear students, welcome to Devika's Commerce and Management Academy. Insurance claim, this is one of the important chapter in corporate accounting. Whether you are doing BCom, CA, CS, any professional course, this is a must chapter and also easy. That is this a chapter I could say compared to other chapters from corporate accounting. Insurance claim, heard this word? When when you were doing final accounts, simple final accounts, in final accounts we had an adjustment. I need to remind you all because that's related to this same chapter. Extension of that adjustment is insurance claim chapter. Okay, so in final accounts you heard that there is a stock destroyed, stock destroyed destroyed by fire, amount of suppose say uh, 50,000 rupees. Out of that claim is insurance claim 40,000. Heard this adjustment? Okay, stock destroyed by fire, amount of 50,000 and claim is 40,000. What you used to do? So one thing is trading account, credit side 50,000 you used to write. Then after that, out of 50,000, company is paying 40,000. Means rest of the 10,000 is a loss. So that loss we used to write on the profit and loss account debit side, isn't it? Then balance sheet, whatever company pays. So 40,000 is company is paying us, so that 40,000 comes on the balance sheet. Like this we have done. If suppose 50,000 loss, claim 50,000, then profit and loss account it doesn't comes 50,000 and here also 50,000. Second case is 50,000 loss and claim is also 50,000. Then trading account always you will write trading account credit side and fully recovered, so balance sheet asset side you are writing. Third case we have taken stock destroyed by fire 50,000, claim is 0. No claim. No claim means as usual 50,000 and the balance sheet it doesn't comes. In profit and loss everything is lost because no claim. So in profit and loss account we used to write 50,000. Hope you remember this adjustment. Now extension of that we are going to discuss insurance claim. You know that every company they have to insure their goods, because if they do the insurance, they go for insurance, then only they'll be protecting the business in future. थोड़ा कोई नहीं चलेगा खत्म करा या okay. So every company they have to insure their goods. Now for this they have to prepare insurance accounts, insurance calculation they have to prepare. So how do they do? Three steps are there. Three steps you have to remember, always remember. So calculation of insurance or steps to solve insurance claim. Three steps. First step is memorandum trading account. Trading account, you know, same trading account, we are saying it as a memorandum trading account. Why memorandum trading account? Means trading account we are preparing in the mid of the year. Whenever stock destroyed, at that period you are preparing trading account. We are not waiting till the end of the financial year, 31st March. No, we are preparing whenever insurance, whenever there is a stock destroyed, that period only you are preparing. That is why we call it as a memorandum trading account. Memorandum trading account is just like normal trading account only. Okay, so remember that this is to find out the goods destroyed by fire. So this memorandum of trading account is we are preparing to find out the goods destroyed by fire, and when we are preparing at the time of destroyed. So this account is prepared at the time of insurance claim, you can say. Insurance claim or goods destroyed. If after after starting the financial year, suppose say April started, April, May, June, July we got there is a accident, so due to that some goods are destroyed. Means July month only we are preparing memorandum of trading account. Okay, that is why anytime you can prepare it. We need not to wait till the end of the financial year. So that is why we say it as a memorandum trading account. It is just like trading account only. I'm giving you just format memorandum trading account. You know, trading account generally we used to write opening stock, purchases, wages and other direct expenses, and credit side sales. Okay, so these are the general transactions you'll find: opening stock, purchases, wages and sales. Now coming to gross profit. Gross profit is also given in the problem. Gross profit is given in the problem. They'll be saying that 20% of sales, means some percentage on sales. Please remember this, percentage on sales. If they are saying 20% on sales, see the sales, how much is there? If it is 1 lakh, 20% comes to 20,000. If it is 30%, 1 lakh, 30% means 30,000. So that will be writing. Means gross profit is given in the problem. Gross profit is given. You are calculating and you are writing. Now what is the balancing figure? Means debit side will be more. Debit side all the transactions minus sales. You will be getting closing stock. This is the balancing figure. Please remember this. We are not writing the closing stock. We are finding out. We are getting the closing stock by writing all the transactions: opening stock, purchases, wages and any other direct expenses. Closing GP is also given in the problem, that you are calculating based on the sales. Sales is also given. So what you are getting? Closing stock. Closing stock you are getting. Okay. So this is the first step, memorandum trading account. Did you follow? Now second one is that amount to be claimed from the insurance company. How much amount is to be claimed from the insurance company? Simple formula, remember. Closing stock minus stock salvaged. Closing stock means here you got already this closing stock minus stock salvaged. Stock salvage means how much stock you could save. Total stock is not destroyed. If total stock is not destroyed, something is saved. So that something is this one, stock salvaged. If anything is left over. If nothing is left over, the second step we won't be going. Am I clear? So this is second point. The third point is that average clause. You have to calculate average clause. Average clause, why do we calculate? Means every insurance company will be getting a lots of amount to be paid. So to save the insurance company, to minimize the insurance claim, this average clause we are preparing. Are you getting it? So to save or to minimize the amount to be paid to the client, that amount we wanted to minimize. For that purpose, average clause is to be prepared. Now, this is claim admitted by insurance company. This is average clause means nothing but claim admitted by the insurance company. How do we get? There is a formula. Please remember this. Formula is value of stock destroyed. Value of stock destroyed. How much stock is destroyed? Okay, that value into value of insurance policy. Stock is destroyed, suppose say destroyed 1 lakh. Total stock is destroyed 1 lakh. But we have insured only for 50,000. Insured for 50,000 only. Okay. So stock destroyed means that is 1 lakh. 1 lakh into value of insurance policy. How much we have insured? We have insured for 50,000 divided by value of stock on the date of fire. Value of stock on the date of fire, which means nothing but a closing stock. Value of stock on the date of fire. Value of stock, how much stock is there? Closing stock. This already we found it in the memorandum of trading account, right? So this amount only, closing stock. Closing stock, say for example, this is 20,000. We'll take the 20,000 only. here. Whatever we got it, that we are writing. Formula able to remember? Very easy. Stock destroyed and insurance policy amount by closing stock. By closing stock, that's all. So with this you'll get average clause. Generally in any problem, so you will be concluding with memorandum trading account only. And next stage you may get at the most, if salvage value is given, then you'll go for second step. And this third step, so that is average clause, will be preparing whenever value of insurance policy is given. If not given, where is the question of preparing this? Not required. So remember this. Okay, these are the main three steps. Now here one more important thing you have to remember. Average clause is not going to work out. Average clause is not applicable in two cases. What are those two cases? In two cases this is not going to applicable. First case is if no insurance. Insurance is not at all there. There is no insurance. Goods destroyed 1 lakh. Insurance is 0. Insurance is nil. Then it's not applicable. Okay, because as per the formula we need insurance policy amount. If no insurance, no question of preparing this average clause. And second one is if entire stock is destroyed. If entire stock is destroyed, where is the question? Why do we prepare? Isn't it? So only in these two cases this is not applicable. Rest of everything is normal. This is applicable, average clause. If you remember these 3 points, simple, easily you can go ahead. Problems. Next class onwards we'll work out few problems. Few problems, just to focus. I'm taking different problems and every problem is different from another problem. In that way we'll solve different problems. Easily you can understand it, but try to understand and remember these points and keep a notes with you. From the next class onwards we'll be preparing the practical problems. You need to refer this. 3 points only, simple, easy. Okay, so stay connected, check out the playlist. Whatever is already uploaded, please use it and don't forget to share this video. Good luck.